Hey, welcome everybody. Let's talk real estate. Your weekly BS with Barry Saywitz about the current commercial real estate market here in Southern California. As we take a no BS look at both sides of the issues driving this market today to find the best solutions going forward. With our man right in the middle, it's Barry Saywitz. Hey, Barry.
Hey, good morning, Paul, and good morning to all of our viewers and our listeners out there. It's Tuesday morning. We're back here again. I am Barry Saywitz, president of the Saywitz Company and managing partner of Saywitz Properties, and we are going to talk some more real estate. I'm excited about today's show. We are into the month of June. And for those folks here in Southern California, I'm hoping we're past the May gray since it's been a very dark and gloomy month this past month, and it's supposed to heat up. And for those folks in other parts of the country, I wish you good weather going forward as well. I'm glad to have our guest on the show today. I'm excited because I want to hear his story and talk some real estate. I want to welcome CEO of the Kelemen Company, Tibor Kelemen. Tibor, welcome to the show.
Thanks, Barry. Good to be here.
Yeah, so I appreciate you coming on. You had a long drive, I think, right?
Yeah, it took all of 15 minutes, but May gray is still June gloom.
That is true. That is true. So we can only hope for sun in a couple of hours. That's the plan. But I want to, your story is an interesting one. You came to the United States as an immigrant at the age of 18 from Romania. With not much to your name and no real estate experience. And now we fast forward, 2-3 years later, and here you are in Orange County, California, and CEO of a big real estate investment development company, and have done other things along the way. And so I want to rewind to when you came here in the first place, and I guess talk about how you ended up in Southern California and what was the reason for coming here.
Well, that's a long story, but you were right. I did come to this country in 1994, day after the big earthquake, the Northridge earthquake. And literally, I think I've had $77 to my name when I arrived. The drive really was just one of freedom, of wanting to explore truly all of what America had to offer. Having been raised in a communist country until the age of 14, you learn a thing or two about absence, about shortages of electricity, of water cutoffs, long lines for bread and milk, and of course no passport, no TV, no outside magazines of the world. And so by 14, I knew that there had to be more to life than what I was raised with. Yeah. I was fortunate to be raised in a loving family and in a community that really didn't know any better. But by 14, I had made up my mind that I was going to explore the world, and I'll find home somewhere in it, because I just didn't think that the old system was for me. So by the time I graduated high school, I had done some summer work and winter work in Sweden to save up enough money for a flight ticket. And I arrived in 1994. I landed at LAX. I got on my knees. I kissed the ground, and I said, "This is my new home."
And how did you pick LA versus any other parts of the United States?
Well, the influence of 90210 and Melrose Place played a significant role in my life in my mid-teens. After the fall of communism, obviously, MTV showed up, and with it started some of the foreign stations introducing TV shows, etc. And so we were hooked on Melrose Place in 90210, and I was like, "This is
where
it.
I gotta go." Right.
I gotta go. I mean, it's sunshine all year round. Forget snow, forget ice and slushy weather. Today's May gray, June gloom. Not quite California-like, but that was the appeal.
Yeah,
that was the appeal.
And was your family supportive of you going and doing this adventure?
They didn't really have a choice in the matter. I think they've learned that by age 14, I was a pretty stubborn kid, and if I wanted something, I was going to go after it. 2 months before the fall of communism, I actually ran away with the aim of crossing the border and escaping Romania. It was a 3-day ordeal with 3 friends. We made it to the border, train hopping, climbing to the church tower to scout out where the border patrols were. But unfortunately, our team fell apart. We decided to turn around, and just as we turned around, we got caught by the police. So yeah, I put my parents through quite a bit, even at age 14. As a parent now, if my kids would have disappeared for 3-4 days, I'd be devastated. At the time, I don't think I understood that, and but it was clear enough for my parents that when I said I'm going, they knew that I wasn't going to sit around. So, yeah, they were supportive. They helped in every way they could. But yeah, my mom was in full tears, not knowing when she's going to see her son again. And here we are. Fast forward, 30 years later. Now my parents are out here. My brother's out here. So my immediate family followed me.
Yeah, which is great. And so you get here to LA and you go, okay, now what, right? Where are the pretty girls? Where's the beach? And it's not such a cheap place to live.
No, but it was all glitter to me. I ended up in Malibu, out of all places. I had a Swedish girlfriend who was out here as an au pair, and she was instrumental in helping me get a visa. With a Romanian passport, you needed an invitation from an American citizen, someone who vouched for you, who would put up, with your visit. So she's helped me obtain that, and also helped me for the first 2 weeks to come live with her. She had a guest house in Malibu off of.
So you were roughing it.
I was roughing it. I mean, literally, I was listening to Waves and Aftershocks because the first night, literally, a number of Aftershocks were happening at the time. But I was so in awe of it all that I think it took me the first 2 years, I thought I was in paradise.
I wouldn't leave Malibu or the au pair, to be honest with you.
Well, 2 weeks later, I got kicked out by the by the house lady. Right? She said, enough, you got to go somewhere else. And so that's when reality really set in, because I had no idea where I was going to go. I had done a little bit of landscape work for the neighbors, so I've made $50, but I really didn't have enough money. I used that money to go buy a fake green card and a fake ID in downtown LA so I could go get a job.
Yeah.
But I was living at a youth hostel in Santa Monica on 2nd Street, $15 a night. I mean, by the third night, I was mopping floors over there just so that I get a bunk bed to sleep in.
Huh. And so, all right, so you're here and you're living the dream, sort of. How do you end up from there to being in Orange County? Or is there stops? There must have been stops in between.
Yeah, I mean, it took a while. It took a while to come here, and I was joking with you that before I got into real estate, I've had 23 different jobs.
Yeah,
and that was the journey. But I, look, at the end of the day, I did what I had to do to survive. I mean, any job I could get to pay the bills, and try to go to school at the time. But City College, even I couldn't afford City College at $130 a unit for a foreigner when I was making $8-9 an hour. There's no schooling.
Yeah.
And so I ended up pursuing my passion of becoming a race car driver. As a kid, I idolized Ayrton Senna growing up. I was going to be a Formula One driver, and I ended up racing shifter karts and instructing at a racetrack out in Beaumont, where I ended up meeting a guy by the name of Steve Bren and his brother Kerry Bren and some of their friends like Danny McKenna and Massimo, the designer. These were guys that would come out with their kids and race go-karts, and so I would help and instruct them, and I became friends with them. Steve and Danny had helped me for a number of races to sponsor me on the national championships. But Steve was brave enough to tell me that, kid, you're too old, at 22, 23, if you're not already in an open-wheel car, and if you don't have a sugar mama behind you, you're not going to make it as a race car driving open-wheel racing. But he said, look, I like you. I'll give you a job. I'll teach you about real estate, and maybe someday you can go sports car racing. And that was the break that I got in getting into real estate.
And fortunate that you're talking about a guy whose father is one of the wealthiest guys in the country and probably the wealthiest in Orange County, and happened to take a liking to you.
Yeah, I was just following my passion, and it's funny how the universe opens doors for you when you apply yourself, when you give your heart to whatever you end up doing.
And so this is around the same time that Steve Bren starts Bacchus Development, where he's doing his own development in Orange County for office buildings in the Spectrum. And so how did you make the transition, or how did it happen that you went from driving go-karts and cars to transitioning into getting a job in real estate?
Well, Yeah, I at the time I was also working as an ambulance medic because it had flexible schedule.
Now, were you living in Beaumont, or you just drive out there on the
I
weekends
would
as well?
drive out from Venice Beach and instruct there 3 days a week, and then I would work 3 days on the ambulance for American Medical Response. Steve offered a job without really a role description. He said, "Hey, look, I don't know where I'm going to put you, and I just know that I like you. You love cars. I love cars. I've got a few cars. We can go drive them. We can just hang out, and you could shadow me for a little while, and then we'll figure out something for you." But he said, "You got to move to Orange County." And this was 2002. At the time, I thought Orange County was a pit stop on the way to San Diego from LA.
Yeah, which it used to be for a long, long time.
I knew about John Wayne Airport, and that's about it. But when I came down, Steve gave me a tour and showed me the ranch, the Irvine Ranch, and the projects that he was breaking ground at the time in the Irvine spectrum. And I thought, man, this is going to be a new chapter. I'll adapt. What's new? I've done it for 10 years prior to that, and I moved. I moved to Orange County, and he put me in to learn a little bit about the development game through Nexus Development, who was his partner at the time.
Right.
So Corey Alder, Kurt Olson, Jeff Patetti, those guys were instrumental in the early days of me learning the basics of real estate.
And for those who are not familiar, the Bren Nexus development was sort of a unique development at the time in the Irvine spectrum, where they were building small owner-user buildings, which became the fad and the hot ticket back in that time. It's still attractive, but it was really sort of a groundbreaking kind of a concept because until that point, basically the Irvine company had owned and controlled almost everything down there.
Yeah, I mean, you're absolutely correct. If you were a small business owner and you wanted to own your real estate and you needed, say, 2,500 square feet or 5,000 square feet, that was impossible.
Yeah.
You were renting, period. And so in that regard, Steve pioneered, and then Panattoni and Cole, a number of other developers followed suit in that to fill that void. And so we've built the first 35 buildings in 2003, 2004 to great success. And so that followed with 5 other projects totaling about 250 buildings and about 1.5 million square feet over the span of about a decade, if you will. And so, yeah, that was my education in real estate, and everything from entitlement to permitting to construction to selling the buildings,
right,
to hand-holding those owners' hands through the process, because many of them purchased with the small business loan,
right,
which required them to have the space at least permitted and drawings in hand. So I've gone through so many design meetings that by the time I was done with Bacchus, I'd probably sat through about 500 design meetings of build out of space and met 500 other contractors bidding that and building it out. So it was truly a unique opportunity to experience velocity and development all in one.
Yeah, and truthfully, at that time in the real estate market, if you rewind, I mean, you're really coming out of the really tail end of the dot bomb, right?
Yeah.
The .com, dot bomb. And so this owner-user, I don't want to call it a phase, but it really was, because it really, I remember it took off everywhere, not just in the spectrum, but since there was so few opportunities in South Orange County for a small business owner to buy a building, this was really the ticket down there. I mean, and people were jumping on it.
Yeah.
We made several deals for clients of ours, and obviously they did very well in hindsight, because at the time it was an expensive proposition. But with the SBA loan, you only had to come up with 10% down. And today those buildings are worth 3 times what people paid for them then.
Yeah, I mean, we're running out of land in general, so there's no duplication of those of that product type in that location to be in the Irvine spectrum. I think that was a phenomenal strategy looking back. And it worked charmingly until the Great Recession.
Right. So you fast forward, then we hit 2007 and 8, and everything tanks, so to speak. And really, you guys were at the tail end of whatever phase you were in. It wasn't the tail end of everything, but just a slowdown overall. There's really not much going on from a development standpoint at that time.
Yeah, I mean, the projects were finished, but we did get caught with our pants down, so to speak, because we had over $100 million in construction loans outstanding that were maturing, and as you recall, the world was ending.
Right.
No lender was willing to put more money up. And so we found ourselves in a Chapter 11 reorganization with Bacchus. We'd let everyone go. And in fact, interesting enough, that was the next chapter of me going into business on my own. Because I don't know if it was luck or foresight, but in 2007, I had wanted to start my own business. And Steve was a friend all along and a mentor, the guy that I worked for. And he allowed me to start a company by the name of Windwater Realty that became a third-party broker, specifically focusing on selling those assets that we had built.
Yeah.
And it made a ton of sense for me to kind of start thinking about the next chapter, because I knew that Steve had not planned on anything new for a while. And this 2007-2008 period was the tale of two cities. It's the best of times and the worst of times.
Right, and it turned, I don't want to say on a dime, but pretty darn quickly, right? And it wasn't, the dot bomb. I mean, I lived through a lot of ups and downs. Other recession or recessionary or retrade periods in time affected certain aspects of the economy. This really impacted everything across the board.
Right.
And everybody, myself included, were in a world of hurt. Yeah. And so it's interesting that you would start your own company at a time when everybody else is in a tailspin, and then start to build it from there. And then obviously as the markets recovered, which didn't happen overnight, it created other opportunities for you.
Yeah, the first year coming out of that reorganization, we were busy. I mean, we had, I think, almost 35 buildings remaining to sell. And I wrote the business plan and defended in court for Bacchus about how we were going to sell the remaining of the assets. So it was a logical choice for me to stay involved and continue to shepherd that. But by 2009, we had evolved from working exclusively for Bacchus to servicing some of those owners to whom we've sold the buildings to. Right? So they came to me with, hey, I need some help leasing this space, or can you help manage the space? Or so it was a natural evolution. We went from being an exclusive listing agent for Bacchus to becoming a multi-purpose, vertically integrated organization offering leasing, sales, property management services. And then on the tail end of that, by 2010, 2011, I began to see signs of major corrections where we were starting to pursue our own investments. And that was through passing the hat, friends and family. And
yeah.
Do you have $5,000? Do you have $10,000? Now let's go to this foreclosure auctions happening. We got to go now. We got to show up cash.
And there were opportunities then.
And yeah, we, hands shaking, because if you show up with $300,000 in cashier's checks to a foreclosure sale.
Right, and you need 10,000 increments, right? I've been there, I've done that. And then you stand in the back and you wonder, okay, what do I take out? And
it's interesting because you got all sorts of characters showing up, and guys wearing hoodies, some with pit bulls, and you're wondering, are you going to get beaten up and money taken from you? Is this really going to happen?
I hear you. I've been there and I've done that, and a packed courtroom, if you will, and hands flying, and guy looks like he just rolled out of bed, and he's got a briefcase full of cash or checks or what.
It's
crazy. We do a whole nother show on that. I mean,
it's an interesting experience to have gone through that. And we've gotten really lucky with those deals that we were able to secure, but that quickly went away. I think that the cat was out of the bag in probably a 3 to 6 month period. By then, the auctions had gotten so far in pricing that we weren't comfortable chasing them anymore without due diligence, without having seen the units themselves, because you're buying blind, basically. Yeah. You're purely working off of numbers of what you thought the market value was, where the correction was, without seeing whether the interior is totally destroyed or not.
No, I remember I went to one, and they were selling a property on the peninsula in Newport Beach, and the starting bid was $100,000. And there must have been hundreds of people there.
You're bidding on that.
Oh, yeah, and it quickly went to $1.5 million, right? And, I mean, today that property is worth $3 or $4 or $5 million, but at the time, to go from $100,000 to $1.5 million, and to watch it was just a sight to be held. And then you just wonder what the heck somebody's doing, and they get wrapped up in the whole thing. But so once the auction and the distressed properties, I'm going to call it 2011, even 2012. To me, that phase of the gyration in the market is past, and now you're onto other things. And you did some creative stuff. I remember you did some buildings where you were building creative office space or repositioning it or remodeling it for sort of the next generation of user.
Yeah. Yeah, I mean, having been part of that wave of owner users that came, right? The beauty of selling to small individuals, and many of them were ultra creative. I mean, these were marketing agencies that, handled the Lakers, Clippers, or big brands, and they wanted a shiny office that that spoke of their identity. So I've witnessed the creative space before the term creative space was there. And so we saw a chance in an opening of taking some of the older buildings and creating spec spaces.
That was the
And so we pushed the envelope a little bit on that, and we're very successful in 2011, 2012, all the way, through the better part of the decade. We had great success with repositioning over $500 million worth of properties, and that was a great run. I don't know whether we were good or the market was in our favor, but we came out ahead. Which
you take credit, right?
which today is not quite the same landscape, but yeah, that was a fun period to have had that opportunity to transform some of the older buildings and play into the community's needs at the time.
And that was a time where this creative space with the polished concrete floors and the open beam ceiling, and there was a lot of older office space. There was a lot of quasi light manufacturing space really throughout South Orange County, the airport area in particular, that was getting converted. And like you say, there was a demand for this sort of tricked out, neato kind of a space. And then you had these sort of younger tech companies coming back that wanted that kind of feel and flavor. The traditional office space, the old school lawyer space with the brown wood was out the door.
Yeah, well, office naturally goes through every decade a rebirth, anyways. Just cultures change, and with that, the need, and especially now, talk about COVID, it's a whole different ball of wax altogether. But yeah, I think that the early signs of that were exactly just that. Not your traditional office, not your father's office was essentially what everyone was looking for, and so we found a need and we met it.
And so, Windwater, you ride the wave, so to speak. Grow the management, grow the investment. I'm going to guess that the capital for the investment opportunities, again, you're going back to the well with friends and families and contacts. And at this point now you've got a track record. So there's not as big a risk or a big as a concern, I suppose, that you can't do it because you've already done it a few times.
Yeah, well, the good news is that when you make a buck for somebody, their friends show up, and their cousins show up, and they want a buck. And so yeah, we've had a good track record, and that's helped us with our capital raise. Although capital raising is never easy, especially when you're early in a cycle, when you want to be bullish and everyone else is thinking that the world is ending. But we've had a good track record. I ended up bringing on a partner in 2014 as well, who had additional capital. I had tied up all of my capital in real estate, and I still wanted to do more deals and needed liquidity. So I've met this young gentleman who at the time was bullish like me, and we teamed up, brought additional dollars to the company, and we've acquired more properties as a result of that partnership. But precisely that partnership was also the beginning of the end of what I thought Windwater really was as a vertically integrated organization. We, as partners, saw things differently, wanted to go about things differently. And so by 2017, 3 years of working together, we parted ways, and I ended up selling the brokerage arm of Windwater to him.
Gotcha.
So then the KELEMEN Company was formed on the heel of that with a more precise mindset of focusing on investment deals, syndication, development, and managing the assets that we own. And in that process now we are also offering third-party property management services to clients that we sell buildings to or clients that we have relationships with.
So we're going to fast forward. I'm going to skip the COVID because we've talked enough about it and we know the drama that was associated with it. And the good news with COVID is while there wasn't a lot of stuff going on because nobody knew what the heck to do, the fact of the matter is there was opportunities coming out of COVID before the interest rates started to run up. So if I fast forward to today, right, or over the course of the last, let's call it 12 to 24 months, market's going fine coming out of COVID, and then all of a sudden interest rates go through the roof, which makes it difficult for you and me and everybody else out there to be able to make a deal pencil and to borrow very expensive money when the lending environment gets tighter on top of it.
Yeah, so I don't know. Is Office out of COVID yet?
Yeah, well, it's working its way, right? It's trying.
I think at least there's crystallization of what I think values are starting to sort of crystallize. But yeah, you're right. It's we're still battling the effects of what was a perfect storm, right? A mandate to stay at home that turned into lasting habits. It wasn't just for 2 weeks, right? If it had been for 2 weeks, I don't think Office would be where it is today.
Yeah.
But the fact that for 2 years, 2+ years, and in fact, to this day, 4 years after COVID hit, many governmental agencies are still not back in the office, right? And so that was one impact where offices were manufactured to become empty. And then with that, those who came back wanted to have a better experience. It wasn't just a cool space anymore. Hey, I needed some private isolation. I needed a living room. I wanted to feel like I'm at home. Oh, I want to bring my pet to the office.
Right.
Oh, and by the way, there's got to be a gym, because if I got to get in my car and drive somewhere else, or laundry, or get a cup of coffee, or get my hair cut, ideally I'd like everything to be right there, so I don't have to get in my car. That evolution is changed dramatically what office experience is, and I think it's changed, real estate in general. I mean, residential prices have shot up precisely because of that nobody wanted to go back to the office. Now They wanted to spend some time at home. And where was home? Wait, I could be at the beach and work remote?
Right. And I'll spend more money on my house because I'm going to spend more time there. And the market's still strong because there's low inventory.
Right.
And so in today's world, what kind of projects are you working on? And how difficult or easy is it to drum up deals in today's environment?
Yeah, so I guess maybe add to the previous question. I think that, with that transformation, there are sectors in commercial real estate that have adjusted or corrected. Offices being one of them. Industrial's gone the opposite direction. So has multifamily as a result of that. We are chasing opportunities where there's been a severe adjustment to the previous value.
Yeah.
Let's call it pre-COVID value. And in office, that means two categories. One, office that's worth holding on to and putting some money into it and making it nicer, or office that is now obsolete and needs to become something else.
Right. And so you either have redevelopment and location. Right. Becomes a lot more of a driving point, I think. Where it's always been the case with retail, it becomes that much more important now with office or with a multifamily.
Absolutely. And touching on retail, too, you bring up a good point, right? The grocery-anchored retail, I mean, that's a category that's done quite well. It temporarily went through a blip,
right.
but it was a very shallow. Unlike hospitality, for example, we have a project in Chicago that we just signed a deal with Hilton to do a 155 bed luxury hotel with 3 restaurants, rooftop pools, speakeasy, a big gym. That market sector was hit so hard when leisure and corporate travel was off. I mean, hotels adjusted significantly. So we're looking at deals where we see a tremendous upside that coming out of this COVID is either a new identity, a higher and better use, or a total conversion, and through either an adaptive reuse or re-entitlement. Those are the deals we chase.
And is that a byproduct? I mean, number one, I assume that the upside and the value add would get you and your investors the return that you need to be able to do the deal in the first place. But then also, at least from our perspective, it's very hard to just make a deal pencil on a cap rate and try and get a return without some value add going on. I mean, there's no like, hey, I can borrow at 4 and I can buy a 6 cap and at least there's some spread. It's the other way around.
Yeah. I mean, I think that the interest rate environment and the fact that your traditional banks are out of the picture is making it tougher. But that's what creates opportunity, right? I think that when someone has to sell,
right, you need an event, right?
Not by choice, right? Not by choice. When you must sell, and you got to meet the market, there's going to be an adjustment in expectations of what you're going to get in price if you're a seller, and there's also pretty dramatic discount expectation if you're the buyer, because you're not going to go into a negative arbitrage. If you're borrowing at 10% and your yield on the deal is at 7, you're
You're losing
3%.
money.
You're 3% in the hole every year. That's on your cash flow. That's not an investment unless you have a higher thesis and a better use, a different use,
Right.
where cash flow doesn't matter.
Right. No, I agree 100%. So where do you think that the markets are going? And we've talked on previous shows in the past several months that interest rates will come down. Every broker that pitches me a deal says, oh, you can buy the thing and then you can refinance it in 6 months and get a better deal. And I go, oh, that doesn't hunt.
Yeah, hope is not a business plan.
No, and me relying on the Fed to drop rates enough to have it make a difference for my investment to pencils, also not a good business strategy.
Well, I think every economist that predicted 5 cuts this year is on a
It's out the
losing end
window.
of the bet, because
Right.
I don't think that that's going to happen. Uh, I think that again, you don't see deal velocity happening out there, right? And
No,
depends-
transaction volume is slow. And I don't know, guys, I'm curious your input, but I mean, I find sellers still trying to hold on to yesterday's dollars, yesterday's value. And the expectation is if interest rates come down, somebody will give me more money and I'll get my number. And if I don't have an event to sell, and my interest rate currently is not going to reset to 6, 7, 8%, and I still have a 3, 4, 5 in my number, I am not motivated to sell. I'll just stay. And if somebody gives me some big fat number, I'll do it. Otherwise, I just wait. And so we go down the road with a bunch of deals, and then it just stalls because the guy's not motivated.
Yeah, I mean, I think that where we see transactions happening are precisely the areas that you've mentioned, where there must be an event, and most of the time it's the capital partner, institutional capital, the Blackstones of the world, who've now recognized that, hey, look, office is a 4-letter word. It's going to take too long and too much capital to see this come back. Let's just cut our losses. Let's meet the market. Let's sell. And so you're seeing, bigger assets moving at a big discount. And I think that the bigger the asset, the bigger the discount becomes as well, where institutional capital wants out of the deals. And so if you have the ability to then raise capital for something that Blackstone's dumping, you better have some conviction, and you better have some deep relationships who believe in you, because otherwise you're never going to be able to raise the capital. Because, like I said, your cost of borrowing, as you've mentioned it too, is so high that the price has to adjust 40, 50% to what it was 4 years ago in order for the deal to pencil.
Yeah, and you need reserves enough because there really is still no light at the end of the tunnel. And if you're going to repurpose the asset, it's going to take time, it's going to take money, and things are still very expensive, and,
Right.
and it costs money to build.
Yeah, it does. It's again, depending on what sector we're talking about here, it's capital intensive, particularly the office side, multifamily. Again, interest rates played a big role in that, right? Rents will have to still continue to climb for deals to make sense on that. The industrial market has gone for 2 years on a ride that, now it's correcting, and we're seeing that come back, both in terms of price expectations as well as lease rates. Single family is the single remaining asset class that I think that it's still on an upward trajectory, precisely because no one on the secondary market is selling because they've locked in some
Right.
2.5% interest rates. And there's not enough new inventory. So home builders are bullish. We're seeing, land values go up on development side of things, where single family homes are still pushing prices to an upward trajectory despite the high interest rate. So it really just depends on what sectors you want to be in, what's your appetite for risk, and what's your thesis and about your real estate strategy.
And so if there was a short answer, which I know there's not, but if there was a short answer, since Paul's waving at me, we're running short on time, what would be the advice, or what is the strategy on your end for, let's just call it the next 12 months? I mean, is it look for opportunities but be careful? Is it wait for people that have an event and there's some distress or need to sell? I mean, what would be your advice to people out there, and then what's your strategy for yourself, I guess is what I'm asking.
It depends on what your cash flow needs are, right? There's opportunities. Every time that there is an event, like we've seen, where the Fed is slowing the world down, you will find people who have to transact. And if you're patient enough, if you're diligent enough, you can certainly buy deals. You can also go buy a coupon clipper if you wanted to, and if you're happy with a 5-6% yield, and you just wanted a safe asset class, go buy an industrial box or go buy single family.
Buy a T-bill, right?
Or buy a T-bill, exactly.
So that is the rub, and I think that's also why there's a lot of sort of the mom and pops and the older generation people are like, well, I don't need the risk. I'm getting 5.25 in the bank. Why am I going to go put my money at risk someplace else unless there's the promise of a double-digit return?
Which is why you're seeing a lot of capital sitting on the sideline, right?
Yeah.
And so for us, the opportunity as value-add guys, I mean, our business plan is buy, fix, and sell. We're looking for broken deals, whether it be the debt maturing, whether it be the capital partner wanting out, whether it be the vacancy too high and too much capital needs to go in, whether it ceases to be an asset class that people look at favorably. We look for those deals. We roll up our sleeves. We go to work. And generally speaking, we have a 3 to 5 year horizon on those. We work our butts off and hopefully have an exit event in that time horizon.
Yeah. Well, it's a good strategy. It's worked for you in the past. It will, I'm sure, continue to work. You just got to be smart and careful, I think, is more so than in the past.
Yeah, I mean, I suppose I should add to that, too, that where we're at today, although it's worked for us in the past, I mean, today in several of our deals, it's about survival.
Yeah, well, look, and I think when you have challenging times, it separates the boys from the men, right? And so whether that's on the residential or the commercial brokerage side where you have the weekend warriors and anybody can make a deal and you hold your hand up and the property sells, now you actually have to work and know what you're doing. And I think the same applies when you're buying or investing in a piece of property.
Yeah, you're right. The work doesn't stop when challenging times come around. The going gets tough, the tough get going, and you're going to outwork everybody else. It's just really, that's the nature of the beast. But you know, I love this game. I love the tangibility of real estate. I love sometimes the transformation that you can bring about just by sheer showing up and doing your thing. And so for us, it's going to continue to remain the same. And we'll see what the future holds.
Yeah. Well, look, I appreciate you coming on and telling your story. It truly is, I don't want to call it rags to riches, but I mean, to start with nothing. And I know what that's like. I had $500 in my pocket and got down to about $80 and used to wash my car and iron my own shirts and, make a sack. I still make a sack lunch, but I know what it's like for hard work. And so to see somebody put in the effort, be creative, be determined and be successful, my hat's off to you, and I wish you and your family and your company much continued success going forward in the future.
Thank you very much. Thanks for having me. I will only add that whatever appears as success, it's not just my own doing. I stand on the shoulders of a lot of great people who helped us along the way and who continue to help us along the way. And so, yeah, it's been a pleasure sharing a few minutes with you, talking about real estate, and fan of the show. And thanks for having me on it.
Yeah, so if people want to find out more about the Kelemen Company, what's the website where they can go to check you out?
Yeah, so the KELEMENCompany.com, that's KELEMEN company.com. You'll find our projects, what we're working on, a little bit of information about us. And yeah, if someone's got interest and would like to get in touch with us, it's a good way to do so.
You're happy to take their money and hopefully make more with it, right?
I'll always say I'll be a diligent steward of their investment.
Perfect. Well, good. I'm Barry Saywitz. Today is another day we have talked real estate. As I always say, try and surround yourself with smart people so that you can make good, intelligent business decisions. I hope you guys have picked up on some words of wisdom from today. We will see you back here next week on Let's Talk Real Estate. I'm Barry Saywitz. Thanks to everybody here at OC Talk Radio. We'll see you again next week.
Well, there you have it. You've been listening to Let's Talk Real Estate, your weekly BS with Barry Saywitz about the current state of the real commercial real estate market right here in Southern California. On Orange County's only community radio station, OC Talk Radio, streaming live from our studio here at the University of California Irvine's Beale Applied Innovation Center.